GKFX Prime presents the Market Analysis Webinar.
Hello everybody, welcome to the weekly webinar where we'll be previewing the Forex, commodity and indices markets for the coming week. At the end of last week, we had a bit of a drop in the US dollar on Friday. That was after a slightly more dovish than expected message from Jerome Powell at Jackson Hole. The whole week we'd really been waiting for what he'd have to say. He did say that tapering would probably happen this year, but didn't give a definite timeline, and that was seen as a bit dovish. And so we've seen some jumps in euro, jumps in gold, silver, a little bit in oil, and fresh record highs in the US stock market. So we'll look at all of that now and see what it means for the coming week. I won't delve into it too much here. We'll talk about it in the week ahead. But the big event for this week is non-farm payrolls again on Friday. So let's have a look at the Forex market, starting with the euro-dollar pair. This is our daily chart, and I just wanted to put back on what had been discussed in the past, but sort of when it got broken and then chopped back above, we took it off. But it's this rising potential neckline of a head and shoulders pattern, or even just a double top, depending how you want to spin it. It's potentially still in play. We've been chopping around it, but we've not decisively broken below. We've not decisively broken above. So potentially we're still looking at a major top here in the euro dollar. I think 118. If we get materially above 118. And you can see, we'll look at it on the 4-hour chart in just a moment. But if we break above this declining trend line as well and push up to 119, I think we can probably say that this neckline is no longer relevant and we can pull it off the charts. But while we're hovering around this 117 to 118 zone, which we have been for the past couple of weeks, there's still a potential for a major break lower. And actually, the trend that we have on this daily chart and to a lesser extent on the 4-hour chart, which I'll pull up now, the trend is still lower. Now, as of Friday's price action, we put in a big bullish engulfing candlestick on this 4-hour chart. It engulfed almost the entire week's price action, actually, and took us above that key 118 handle. But we stalled a bit from there. It's the round number. It's also the previous peak. So we're struggling a bit there. But we have broken above where that big sell-off happened a week or so ago and took us down to those fresh lows. We've actually made it back above there, and you can see that's where we were kind of stalling for a while, and that bullish engulfing candle from Friday took us above it. So in the short term, the momentum is to the top side, and so I think the most obvious resistance is where we started that first drop off at the start of August. And that actually should coincide quite nicely with this declining trend line through the peaks that goes back as far as June. So as I say, this could be the line in the sand, and it's also about 118.50, which is the kind of 50s midpoint. So three things there, if you like: the trend line, the supply area, and the 50 midpoint, all suggesting a bit of resistance if the price can push up there, and this bullish engulfing candle that we had suggests we probably can. If we do get a dip into this broken supply area here, that could be a little short-term opportunity on the basis of getting back up to 1850. But as I say, I think that is quite significant resistance. And if we get above it, then I think, the big-term picture that we were talking about of the break below this top pattern, I think that's probably off. And then we're talking about a move back up to 120, etc. So let's move over to the British pound. This is our daily chart here. We're still in this long-term trading range. Interestingly, the last drop to the bottom of the range to 136 didn't get down as far as these two prior lows. So some sign of strength there, and obviously a bullish engulfing candlestick was very strong off the lows, and we haven't really gone much. We haven't dropped below the midpoint of that big initial bullish engulfing candlestick. So the current, as of the last few days, the momentum is positive, and we're also coming off the bottom of a sideways range. So if we go off the basis that the range will hold, and this strong bullish engulfing candlestick for now, the momentum is positive. Now we drop down to this 4-hour chart, and you can see that we'd drawn this supply area in a couple of weeks ago, and it's worked pretty well. I mean, it didn't get any major drops from it, but it has sold off from it on every occasion, and it's doing so again now. Also, the 20-day moving average playing a part in the current resistance. What I'd want to point your attention to here, and why I tend to think that probably this declining trend line is about to break and we're going to get a move above 138, is really this move down here. This was a pretty clear-cut support. It was 137. There had been two lows formed there. We'd been downtrending. We, as I say, put in these two lows. If this downtrend was continuing, this really should have been the peak. If it wasn't this, it needed to be this. We broke lower and we took out the lows, but we didn't go anywhere. And the next candle, this candle here, when we got back to 137 and then started moving higher again, and eventually coming to Friday's big bullish engulfing candle, which was the equivalent of the one we just talked about in the euro. This was the important bit. So we failed to continue lower as this big downtrend would suggest. And I think probably this big down leg here is kind of like this has been downtrending for a while, and then we get the big blow off bottom, and then that's it. We're reversing trends here. So it's not to say we go into an immediate uptrend. We could chop around sideways for a while, but I think this little move here, the failure to break below 137, tells us that we're probably not breaking down through 136 for a while yet. And if we are able to break this declining trend line, after this false break lower here, I think the natural target would be these two previous peaks. It's around 138.75, and we've got 139 just above it. It's a round number, and then obviously the ultimate target being 140, which we never quite made it to last time. So don't want to jump the gun. We actually are at the 20-day moving average. We're still in a supply zone, and we're at this declining trend line point. So there's multiple resistances in this very area that we are. But it just seems to me that we've already tested this supply zone a few times, and given this false break lower, it seems like probably the momentum is to the top side. And after the 1, 2, 3, 4, call that 5, we're in the process of the 5th, that we could get another drop, but I suspect we break to the top side. The evidence points that way to me. Let's move on to dollar yen. This is the daily chart. We're still in this horizontal range with the false break above and below, as we talked about before. Let's go down to the 4-hour chart to get a bit more detail here. And yes, this same kind of idea that this supply area has worked several times. A little false break through the peaks with a big bearish engulfing candle down. Again, the opposite to the pound and the euro, whereas the bullish engulfing, here we've got the bearish engulfing, and suggesting that the momentum is bearish for the time being. And I would say, assuming that we stay in this horizontal range, capped by this demand area and this supply area, I think probably we just the default assumption is we come down to test these lows again and possibly probe back below 109. But there's not a really strong trend here. But given the fact we've really struggled to get through this supply area up here and then the bearish engulfing, I think that probably points to a move lower. Moving swiftly on to gold. So we've the bullish engulfing candle in gold, which you're noticing a pattern here. It was obviously just the dollar selling off across the board against other currencies and against metals. So that has taken us much more confidently above the 1800 number, and so now it looks like we're coming up to test this this resistance up here, which is about 1835. And so that's the key one moving forward. And if we look out at our daily chart, we can see that if we get through there, we're probably on our way to test this declining trend line again, which is going to be somewhere just shy of 1900. Potentially, we talked about it. This happened on early on a Monday, I believe, the flash crash in gold. And we talked about it at the time, and we were saying, well, the fact that it sold off so heavily was bearish, but the fact that it recovered so quickly was quite bullish. And so that recovery story has been what's been playing out. And potentially that just was a washout bottom in gold. And now we've tested the metal of the sellers. They haven't been able to drive the price lower after this flash crash. And so now bulls taking over again and just pushing the price back. Not making new highs and not really trending higher on a kind of longer term basis, but short-term momentum in the favor of the bulls, and seemingly in control enough to push the price up to the kind of top of its range. Let's have a look at silver. So we've drawn this downsloping channel in. This is on the 4-hour chart. And it was interesting that we got that after the flash crash in silver. We got the retest of the channel line. We moved lower, but we held on to the lows. And this is when it started to look promising. We came up, tested, and then you can see we kind of hovered above the line for a while and then just fired off it to create that the bullish engulfing in silver. And that took us above the 20-day moving average. And it's just taken us up to this supply area that we'd been talking about since the flash crash. It took us ages to get there. And at this point, it's maybe not the sell opportunity that it once was, because when we first drew this in, we were looking for some of these early bounces to get back up there. But now we drew this kind of we formed this horizontal range with these peaks, really about 23.90 or so, and now we're above 24. So while we hold above that 23.90 in these previous peaks, it looks like we've broken out of kind of basically a bottom, and we're going to come up and probe the top of the range around 25. So I don't think this supply area necessarily holds, but keep an eye out for it. If we do see some moves back sub 23.90, then obviously it looks more likely that it is holding, and we're just in some sort of range for the time being. Moving on to the oil market, again testing a major resistance here. This one, you can see already that it's starting to play out, and I think it makes sense why. This last leg lower, we've retraced 61.8% of it, and it's this major resistance through these previous two peaks, and it's just shy of 70, which is, literally just above that little peak here, pretty much just about touched 70. So we're falling away from 70 and these two areas of technical resistance at basically 69.50. And I tend to think that probably this does have some strength, this resistance. And after this sharp rally off the lows, we've not had many pullbacks, a little consolidation here. Probably if these lows give way at just below 67, then I think we probably have quite a sharp reaction. We've got the demand area down here. I don't know if that plays out. Maybe we come right back down to where we basically to where we broke out. It's either the price can pause here, which is where we kind of got that breakout move, or we come right back down to retrace this whole last leg to make some kind of double bottom, or at least try it. So this, I think, a pretty key resistance here at 69.50. It's already starting to roll over, and I think we come to test these lows, and we quite possibly take them out in the context of this kind of overall general downtrend, right? It's not that we necessarily get right down to the lows. It might, because if you look at this daily chart, we've had a great rally off the lows, and that might be a sign that this overall correction phase is over. But I think with minimal correction since this rally and having hit major resistance, a confluence of resistance, we probably do need to come a bit lower to really kind of test the strength of the bulls here. Moving on to the S&P 500, really the only thing to look at in the S&P at the moment is the 50-day moving average. Consistently, the 50-day moving average has been a buying opportunity. Short term, you can pretty much buy, the history has shown you can be buying all these days and there's not much of a pullback, and then eventually get a pullback to the 50-day moving average, and then that is the buying opportunity. We've also got this rising trend line on the RSI. Clearly this trend is running, it's got to run out of momentum, and you just look at the RSI and you can see the last overbought signal was back in April when we made this peak here, and we had that sell-off that went temporarily below the 50-day moving average, and ever since then all these peaks have come just shy of being overbought, and even this last one that we're currently sitting at, you know, is not overbought. So just the momentum is waning here, and eventually this rising trend line will get taken out, and so will the 50-day moving average. And when it does, I think it will be quite a big move, because it hasn't happened for a while. So, you know, I'm never one to advocate trading against the trend, but this market is definitely getting exhausted technically, and also worth noting that September is seasonally the worst month of the year, and we've just had a massive rally going into it. So there's a couple of good reasons there, the technical exhaustion and the seasonality, to suggest that we're going to get some kind of pretty decent pullback in the S&P coming up. But obviously if you are going counter trend, you've got to be aware of the fact that also we hit the 4,500 round number as well. It's another notable point. But you obviously, if you are going counter trend, you have to accept the fact that the market could move against you, and you've got to make, you've got to manage your risk accordingly. Last but not least, Bitcoin. This daily chart looks a bit messy, but you can basically just say that we made it above 50,000, but we've been chopping around underneath 50,000 for the last week. Here you can see the 4-hour chart. The trend is still up, and we kind of we're trying to kind of break out of this last little consolidation that we've had. We're above. Do I have that as I have it as the 20-day moving average? So comfortably above the 20-day. Maybe we get a retest of the 20-day. We've also got this support here, so that might be an opportunity if we get a slightly bigger correction down towards this support. That's around 44,000 in Bitcoin. But I suspect maybe there's some profit taking going on at 50,000. And so, you know, that might be an opportunity to load up if you're still bullish Bitcoin. Or, as I suspect a lot of people are doing at the moment, is, you know, they were long up here. The market crashed. They held on up to 50,000, and they're cutting losses or you know, taking profits if they were able to buy above 50,000 before the crash. So that's kind of what's going on, and maybe that's reason enough to get a bit of a dip here in price. But short term, the momentum is higher. I'm just not sure you really want to be buying at this point. It's just below major resistance of 50,000. It's not enough of a pullback to really justify buying into. So and it's not breaking out. So probably you want to choose one of the two. You want to wait for the deeper pullback, or you want to wait for the breakout. Just buying underneath resistance, generally a way to lose money in trading. All right, I'm going to leave it at that. Thank you very much for watching. Good luck trading this week, and see you at the same time next week. Obviously, if you enjoyed the video, please click that like button, and make sure to subscribe so you don't miss next week's video. Thank you, everyone.